There's one final thematic, or maybe we can call it a thematic, is this Trump v China or USA v China trade war. I know you've shared some thoughts on it before, so I'm just interested to get your latest thoughts on it, how you think that's going to play out, and any implications for you here at Magellan.
Yeah, well, first of all, I would say that in the long-term strategic or geopolitical struggle between China and the United States are not going to get solved at the moment.
Okay.
The only thing that will get solved is whether there's a truce or not in that, and that is really a political issue for Trump to decide domestically of what he wants to take into 2020. Does he want to take in the fact that there's a massive fight between China and he's fighting for his base against China, or does he want to take in the stock market and he's the world's greatest deal doer and has just done the greatest deal in history? And both of them are viable political platforms to take into 2020. So if you think about the short-term issue, is we could either get in a deeper trade dispute and Trump decides not to take off that table. That is probably pretty ugly for markets in the short term, because most markets are factoring in that there will be some form of truce called in the short term. So we think about the short-term risk in terms of escalating tariffs or not, and how we'd be exposed to that issue. But the very long-term issue is, I've already talked about that getting China right is incredibly important for investing over the next 10 to 20 years. But we can't ignore that there's going to be this ongoing geopolitical tension between China and the United States. It's not going to go away. So we really have to think about how do we participate in that growth in China without putting too many eggs in an American flag around that. We own Starbucks. We own Apple. We're not buying Apple because of its China business, but it's got its supply chain in China and 20% of its revenue coming out of Greater China at the moment. When you think about Starbucks, about 50% of its profit growth in the next decade is going to be driven out of China. So it's an important issue. But if we're wanting to participate more in that structural growth of consumption in China, and it's a very, very important issue, and we don't think that's going to go away with the trade dispute. We think China is going to continue to grow. We'll have cycles, but it's going to continue to grow, and particularly at that high end. How do we participate in that without overly correlating this risk around this ongoing tension between China and the United States?